Good afternoon, everyone, and happy Friday. I am your friendly neighborhood PM here for another week of your top three market points. Now, first things first, happy to report we are back in the winner's circle at 4-2 in our fantasy football league and holding that second place spot. So we're going to try to keep the momentum going this week and get another win. Now, with that aside, let's dive right into your top 3 points of the week. First and foremost, at point number 3, we want to give an update on the Israel-Hamas conflict. Now, missile strikes have intensified from both sides, and what this has done now is continue to drive risk-haven assets such as gold, as well as continuing to push oil prices even higher. Now, we are going to continue to monitor the situation, so as long as it continues to develop, you'll probably get a bullet point here on this video every week. At point number 2, we are now starting to get into earnings season. Now, the first couple companies have now started to report this week, with a big bulk of them happening next week, and we'll talk about that in a minute. But earnings so far have largely disappointed. We have seen disappointing results from American Express, which fell due to network volume, as well as Tesla, that saw operating margins contract, as well as struggles with the production on the Cybertruck. So we have seen negative impacts from earnings so far in the market. You've probably gone on and see just the day change on those stock prices so far. Now, at point number 1, we wanted to highlight that the 10-year yield has now started to encroach on 5%. That's some of its highest levels in quite some time. Now, this comes right after Chairman Powell of the Fed did go ahead and state in his speech earlier this week that policy is not too tight and inflation is not close to coming down yet, and they still have a lot of work to do. So essentially what he did there is left the door open for another rate hike. What we continue to see is that we don't really see another one happening at the November 1st meeting of the Fed, but that does leave the door open to another one, probably another 25 basis point one in the December meeting. Now, futures are not pointing that direction, but as long as the Fed continues to remain that hawkish rhetoric, there is the outside chance of that because they don't want to unanchor those inflationary expectations. Now, those are your 3 key points of the week. What are we looking to for next week? Well, next week, like we talked about at point number 2, it's largely going to be earnings kicking off into full swing with the vast majority of index names reporting next week. So expect to see a lot of updates, and that's probably going to be our earnings edition like we do every quarter on earnings results next week. So expect a lot of volatility and a lot of choppiness next week from those earnings results. Now, that pretty much does it for this week's video. As always, if you have additional questions, reach out to your financial advisor or dig into the written week in review. Otherwise, as always, go enjoy the weekend. Try to enjoy that weather before it starts getting too cold into the November time frame. Otherwise, we'll see you the same time next week. Have a great weekend. Thanks again. Bye.